Hey guys, Alessio, hope you're well. The stock markets have just reached some key levels and targets that we talked about in previous videos. And in this video, we're going to take a look at the chart of the S&P and what this means for the stock markets in the next few months. All right, guys, join me. All right, guys, welcome back. Currently making this video for you from the town of Folkestone by the seaside. Great place to come here if you just want to get some rest and some time away from London. All right, guys, so the stock market has just recently reached a key level of resistance. In fact, this is a target that I had on the S&P for the last several months. That key level was 5,337 on the S&P, which we just reached recently. In fact, here's a very short clip of a members video that I made about reaching this potential target. Here's the clip, we'll come back.
Even if the market pulls back a bit more deeper to either one of these levels, whether it's 5,090, 5,060, or the lower levels near 5,000, I'm still looking for another push higher. So I'm still remaining bullish on the market, eventually to go to higher levels, to 5,337 to 5,400, or from the next lower level, if we get a more deeper retracement or pullback, I'm still looking for that move higher to those upper levels. 5,337. All
right, guys, as you heard there in that particular members video, I was saying that quite likely the S&P could rally to this particular target in the region of 5,337 to 5,400. And again, just recently we reached the target, the key level of resistance at 5,337. And in case you're wondering, this particular target was based on a calculation that we made on the stock market. Now, I'm going to keep this video as short and concise as possible because essentially the key points are, first of all, I'm sure you've heard this phrase, sell in May and go away. But of course, as you probably noticed, quite the opposite has happened so far in May. May this year has been a very strong month for the stock market. We've seen a nice rally so far in the S&P and of course the Dow as well. So I think we've got to take these beliefs about the stock market, sell in May and go away with a pinch of salt because it doesn't always happen that way. Sometimes May can be a very strong month. However, when it comes to seasonality, in other words, how the stock market behaves in different months of the year, it is not the month of May that is the weakest for the stock market. It's actually June. June actually happens to be one of the weakest and most negative months of the year for the stock market, other than September. September is also another negative month. But as you can see from this data and chart, it is the month of June that usually sees selling pressure and some negativity, in fact. So that tells us now we're approaching the month of June, we should be more cautious. Again, we have to remember that seasonality does not mean that price or the stock market has to drop, okay? This is by no means a certainty. These are only probabilities, and seasonality is just one factor among many other factors we look at. So we never just look at seasonality to make judgments about the market. Nevertheless, when it comes to forecasting and trying to figure out what the markets may do, seasonality can be one important factor to look at. Another important factor I look at is sentiment, the sentiment in the markets. And there does appear to be quite a lot of over-bullishness and over-optimism in the markets. As we can see here, just recently we reached greed, a lot of greed in the markets, so over-optimism as well in the markets. So we're seeing a combination of negative seasonality in the month of June with over bullish, over optimistic, greedy sentiment in the markets, both of which can act as an element of risk, a high amount of risk for the markets, for the stock markets in the next several weeks. Also, we're seeing a number of indicators like the RSI reaching overbought conditions. So I would say, given these number of factors, again, seasonality, sentiment, again, over-optimistic sentiment, and overbought conditions, and also the market reaching key levels of resistance, as I mentioned, at 5,337, I think we should be extremely cautious about a potential pullback on the stock market. Again, most people out there right now are not expecting any kind of a pullback or drop in the market. Again, I'm not saying there's going to be a crash in the market. That's not what I'm saying. What I am saying is we should be very careful because I think the odds and the probabilities are increasing for some kind of a pullback or another correction, probably a strong correction in the markets. So I think it's quite likely in the next few weeks, we might see a 3% or more pullback in the major stock markets. Now, I know what some of you are probably thinking. A 3% pullback does not seem like a lot, especially when you compare it to Bitcoin and crypto. But I would say in the stock market, it does matter. Pullbacks of 3% or more can generate what's called a secondary reaction, can produce a lot of fear and volatility in the markets, and this can massively shift and change sentiment in the markets. So I would say it is important to heed and be careful about the risks of a potential pullback, again, something like a 3% or more pullback in the stock market in the next few weeks. By the way, this video is by no means a recommendation to short the stock market or indeed to buy into the stock market. Again, it's purely for educational purposes. By the way, I should say before I finish this video that in case you're thinking that I'm bearish on the stock market, that is not the case. Even though I'm warning of a potential correction or a pullback in the stock market, my general outlook and expectation for the stock market for the next several several months going to the end of this year is still bullish. So I think even though we may see a pullback or a correction in the stock market in the next few weeks, I still think there's a higher probability for the stock markets to continue the uptrend to new all-time highs, if not in the next few weeks or months, but perhaps by the end of this year, going to the months of October and November and so on and so on. So again, my general outlook for the longer term still remains cautiously bullish. All I'm saying is there are increasing signs of danger and risk of a potential pullback in the markets in the next few weeks as we're entering the month of June. All right, guys, I'm going to go into much more detail about the stock markets in the member videos. So go ahead and watch the members video. I go into the markets in much more detail with Elliott wave counts. And if you're not a member, you can join in the link you see right there. Thank you very much indeed. I look forward to seeing the next video update. Cheers. Bye for now.